The PDF file that I just posted is more of an outline for me than for you. Just something to kind of keep me on track. I'm going to talk a lot today about using the raw relative strength combo group for prospecting, because many of the big winners come out of that group. And that's not to say there aren't a bunch of dogs that appear in there, because there are. But I'm just going to try to give you an idea of what to look for. And the main thing to look for is the stocks which keep reappearing in the list. Now I want to bring up this PDF file here. This is what I posted. Make sure you update your add-on. This is a video, it's about a month old, on how to update the add-on file. And I'm going to talk about relative strength prospecting. I also want to talk about fractals. I don't know if you've heard the term, less it's always recorded. I haven't missed recording in 20 years. I send it out as soon as it's over. So anyway, getting back to my what I'm saying over here is I'm going to talk a little bit about the my screen layout, the most active up and down, and then I'm going to get into a relative strength prospecting, and we're going to talk about fractals along the way. Now, fractals are simply a way of looking at a stock or an ETF, whatever, in a variety of ways, weekly, daily, and intraday. Now I am using, since I can't make an intraday chart from Thinkorswim, we have 5-minute updates in HGSI from Thinkorswim, but what I did is I just made a chart of the Thinkorswim chart and detached it, put it down here, and I'll explain this. But when we're talking about fractals, and let me just use this same symbol, PTLA. I'll put it in here, and then I will enlarge it. But when we're talking about fractals, we're talking about charts being built from the inside out. In other words, the lower time frame is the first indication that a stock or an ETF or so on may be changing direction. And what I look for, or what we should all be looking for, is when a stock comes down, looking to establish a low, and then looking for where it kind of stalls out here, for example, and then looking for, let me put this in here, looking for a higher low. So this low right here is higher than this low. This went up and established a high, and then here's a higher low. And then it starts building to the upside. Now this is a 1, 2, 3, 4. I'm looking at 4 days here. This particular chart is 78 minutes, which is approximately divided into a trading day. A 6.5-hour trading day would be equivalent to a daily chart, which is, well, it's not equivalent to, but a daily chart is, of course, a weekly chart is 5 days, is what I'm trying to say. I'm a little tongue-tied here. And then we just move down, and then we get down to this level, and 78 minutes would be equivalent of breaking this down into fives also. I hope that isn't too confusing. But this way, we can see when a stock is starting to move, but it's not real fast. It's not like looking at a 1 minute or a 5-minute chart. You're giving these stocks a chance to develop. And then you just follow this up. Now, this somewhere in this area, right here, when it breaks past this resistance, that's a potential buy point. And then it would have to come down and form a lower low between here to take this out. And it obviously didn't do it on this chart. This is overnight. You can see this gray area here. And it came down, but the next day when it opened, it gapped down from the prior day, but the trend was still up. One thing about looking at stocks like this, the dominant chart is always the longest term chart. So in this instance, I'm using weekly charts. This is where you want to look to see how much demand there really is based upon the longer term. And then you want to look in here at the daily chart. You can see that the last 1, 2, 3, 4, 5 days here, these 5 days are represented here. And what did I say this was? 3 days down here. Those 3 days on that other chart would be represented right there. But you can see it start building here. When a stock starts turning, obviously it's going to be on the shorter time frame, and then it's going to go up from there. Now, I don't want to spend any more time on this right now. When we start looking at some stocks, hopefully later in the session, we can break them down that way, okay? Now, what I want to do is, if you've updated your add-on files, and I mentioned this on Saturday when I sent a note out. I didn't do a video because I had a bad cold, and it's still I still have a little residual cold. So if I cough, I'll take it out of the recording before I send it out. Anyway, what I came up with, I wanted to find out what the most active stocks were, both up and down, during the day. Now, this morning, when I opened this up, I think there were close to 100 stocks in here. And the reason there are so many stocks early in the day is because on this intraday volume, it is running really high, but as the day goes along, these volume numbers will drop below my minimum. And my minimum volume is, first of all, these are $5 stock minimums. They have to have a positive price change. So some stocks that were positive have probably gone negative. So they've dropped out of the list. The intraday volume to the 20-day moving average volume has to be greater than 200%. So early in the morning, when there's a lot of buy orders coming in, you're going to see stocks based upon Matthew's calculations in the program that are showing really heavy volume, but then these stocks settle down as the day goes along, and they'll start disappearing too. And I'm looking for a couple 100,000 shares. And I do this both for the up and down, and it's down to 35 stocks now. Now, I'm using my effort versus result combo, my intraday combo, which seems to work really well because it balances the change in price, the range, and the volume. If I sort on raw combo, a monster, which was on top because I had sorted it on intraday range, I wanted to see the stocks that were at the top of their range come to the top of the list. And then you can see that it goes down from there. Now here's some stocks that meet the criteria, Lyft being one of them, and ELF Beauty, which are near the bottom of their trading ranges. So if you chase these most active, you may get lucky and hit one or two, or many. I mean, some of these are holding up really well, and we only have 20 minutes to go in the day. Which, but let's look at Lyft here, and you can see that what I mean. And I'm just using I want to use a naked chart here, get this information out of the way for this. It opened up here, and it traded down. Now, what does the weekly chart tell us on lift? It doesn't tell us a lot because there's down, there's up, up 2 weeks in a row, and then it comes down. It's just chopping around right now. I like to see weekly charts that are showing consistent moves up with higher highs and higher lows. And when you see a stock like that, it's not going to look like this on the daily chart. It's going to have a nice, smooth uptrend, and that's what we look for. But this is a good way to see what's going on during the day. I do want to show you that I captured the most active ups on the 6th, which was 2 days ago. Most active up. And I'm going to go to my scorecard view, intraday. And this was the list at the end of the day, 24 stocks. And I'm updating right now. Come on. I should have turned that off. Anyway, you can see that many of these stocks are continuing to go higher from 2 days ago. So the most active list can give you some candidates. Now here's Wendy's. Let's see, this was the 6th, this was the 8th, and this is... Oh, this is the 8th. I'm sorry, I'm looking. I said the 6th. This list is from the 6th. So right here was the 6th for Wendy's, and it closed that day at $18.10, and it's now up to 20.3. Shake Shack, this is another one. This is the 6th. Doji yesterday. Kind of stalled out, but it's breaking out. It broke out past that high. It's kind of pulling back a little bit here. Earnings are not in the database yet. They'll be in Tuesday, but this shows what the most active show. Excuse me. Especially if they close, the stock closes near its high, is that there is a tremendous amount of demand for that stock. I want an arrow, not a box. And you can see the demand, and there's a good chance that a lot of these are going to follow through, and we're seeing that right now. Service Master. Well, this was not good on the 6th. That would have been a huge shakeout had you chased that one. But the following day, it opened here, traded down, and now it's going again. So it may not happen immediately, but you can look for some of these buyable gap stocks like this one and see how they do down the road. You can just make a group of the most actives on any day if you want to, and go ahead and prospect them, or you can make a single group and add to it every day. I mean, a single group of the most actives, and then see which ones are following through. And if there's that much demand to make it a most active stock, there's a good chance that it could go forward. It could continue is what I should say, not go forward. Okay, does that make sense? I hope so. I'm going to move on. And let me get down here. And I'm going to look at my list here. I want to talk about relative strength stocks because, like I said, some of these stocks are the ones that just keep going. And what we want to do is we want to find the stocks that keep reappearing. And probably the best example of that over the months has been ENPH. And I'll show you what I come up with now, how many times it appears. Now on your PDF file, and I'm not going to bring it onto the screen, I'm going to go into my designer. And I'm going to select the group inclusion report. And I'm going to clear it. And I'm going to use this group right here, my current non-index group, which I update daily. And I think I better turn my updating off here. And I'm going to go into my top raw combo stocks. And I'm going to select the checkbox here, and it's going to check every subfolder under the top 100 combo stocks. And then I'm going to check children. If I open this up, notice that these are not checked. If I click on check children, these are checked. The daily raw combo groups are now checked. And I'm not using a filter because I don't have a filter here. And I'm just going to run this. And what this is doing, it's generating an HTML page, and you can see where these stocks started appearing. And the number one stock that I mentioned already is ENPH. It's appeared 151 times as a high relative strength stocks in this SmartGroup. Now this SmartGroup cuts it off at 100 stocks per day. It's just the way it's set up, but there could be more stocks in the all securities which would meet the criteria of essentially a group rank of 90 minimum and a relative strength rank of 90 minimum, but most of them are higher than that. Now as I scroll down here, you can see there are some familiar names. Now this is an inexpensive stock, APPS. It has appeared 145 times. It acts like it still wants to go higher. Rent-A-Center, been in and out of that one. Workiva, 132 times, and so on. I'm not going to go down this list very far, but what I am going to show you is I'm going to highlight this over here. It is January 2nd of 19. This is where ENPH was appearing this year, but it was appearing in 2018 multiple times also, and I hope to get to that. But I'm going to do a Control-C here, which copies it. Then I'm going to do a Control-F, which opens up this little window here. And I'm going to type or paste this in. This would be January 2nd. And if you look over here at this side very carefully, you'll see all of these gold marks. And what that means is that the stocks in this HTML, all of these stocks appeared on January 1st. So I just clicked there, and what is this stock here? That's apps again. I'm going to go clear down. Well, here, I need to drag it down. So I dragged it down to here, and you can see that Chima, it also appeared. I must be on the wrong one. Let's be more precise here. I can't. Here, let me see if I can just go to a single one here. Anyway, they represent, there it is right here. It'll appear in yellow on this part of the HTML page also. So Harmony Gold Mine was appearing also as an example of a stock that was appearing on January 1st, 2019, and it appeared 30 times. You can see that it was appearing in January, 1st of February, and then it dropped out until June. It appeared in June and July. The precious metals have been strong there. All of these dates in July it appeared, and then in August it's appeared multiple times now. And we know the precious metal and mining stocks have been strong, but I'm just pointing out that these stocks can come and go out of this raw relative strength group. Now I need to, for some of you, you may not know this, that the way these stocks are, let me just bring E and pH up here. Are calculated is that I'm going to see if I can get this right. So here's 1 month, 2 months, 3 months. 40% of the weighting is on this period right here. And then you go back 3 more months, and that would be 20% of the weighting. And the same back here, 20% of the weight. And then finally 20% of the weight back here. So it's most of the emphasis, of course, is on the last quarter, but it's taking into account all of these other quarters too. Now I'm going to go back on E and pH and do this. I'm going to do this out of sequence while I'm talking about it, just so I don't forget. What I'm going to do is bring that designer back up. And I am going to go into my filters. Oh, I hit the wrong thing. And into my GIR filters. And I just have a symbol list right here. I'm going to duplicate it. I'm going to edit it. I'm going to clear it. And I'm going to call it E and pH. If symbol equals E and pH, and what I'm going to do here well, the first thing I'm going to do is go in and turn up my updating. And we'll wait for that, and this will make this go a little bit faster. Okay, now back into the designer, and I'm going to run this. Still a little bit slow. And I'm going to clear everything out of here. And I need to, I'm sorry, I need to find the filter first. You can see why I don't want you to do this. I just want you to look and figure out. I'm trying to demonstrate that the high relative strength stocks, or the stocks that come out of that group, are some of the the best stocks, and you just need to really notice the stocks that appear over and over, and then do your analysis, looking for support, looking for VPA flags, and so on. So I have clicked up here again on the this is why it's slow. I thought I cleared this out. These are from this year, and while I'm at it, I'm going to go back in to my non-index groups 2018. I'm going to click on raw combo, and I'm going to click on check children. And then I'm going to use this filter ENPH. And if I did this correctly, we're going to see that going back to ENPH since the beginning of 2018, a year and a half ago, a little over a year and a half ago, has appeared 252 times. And that is just in this group. Now the first, I'm trying to locate the first. I should have run these separately. It'd be a lot easier to read. Okay, clear back. Look at this. Clear back on January 2nd of 2018, not 2019. This stock was already appearing in the database. Yeah. I didn't want to highlight all those. I wanted to highlight this one. So let's go look at this chart. Let's go back to January of 2018. Let's take a look at ENPH. And let's see, this is December, and this is a weekly chart. I'm going to get rid of the well, let's see if here I have one with a group line here. This is going back to January, that's 17. Well, it's somewhere in there. Let's do it on the daily chart. You can see how far this goes back. I'll just scroll back rather than making it too small. So it was appearing. And even though it was coming down here, it was still appearing in this list. This is January 8th. So January 2nd right here is what was appearing. It was still a stock which had a high relative strength and a high group rank at this point. And we really can't go back and see that except for it was contained in that group, but you can see why it was probably appearing here, because it had come off of this base. It moved up nicely. Down here it was less than a dollar, and it moved up, and then it had fallen back, and it came down, and was resting around the $2 mark, and that's when it really started taking off. And it certainly has had its ups and downs. And you will find that if you were to generate this HTML, that it's going to disappear from the list. And then it's going to continue to reappear. So just because a stock is appearing in the list does not mean it's going to stay there, but what we're looking for are opportunities to get in to these high relative strength stocks that are trending up. And you can see that, like I said before, it's had its ups and downs, but down here around the $5 level, and that was January of 19, and it also appeared on January 2nd of 19. It really has not looked back from that. This has been a tremendous run. And you can see where it is today. Earnings came out the other day, and it pulled back a little bit. There was an opportunity to get in here. I didn't do it. I know John Randolph did. And he's making money on it. He probably thinks on a day like today it should have gone up a lot more. But I believe this stock has a more upside potential. Now, don't go out and buy it because I said that, but here's a buyable gap. And let me move in on this. Here's the buyable gap right here. Look what happened. It came down. It tested the low of that. If there are any stops just below it, they were probably taken out. But support came in. And the volume's been running above average even on these 2 down days. But now it broke out to an all-time high today, it looks like. And if you can locate these stocks, you only need a few of these stocks to have tremendous returns and not have to worry about a large portfolio. I know it's easier said than done, but it's possible. And your job is to be a detective on this and see what you can come up with. Now, this is the kind of chart that I love on a weekly chart. Why? Because when it comes off of the base here, and notice the group line, the dotted line, groups are very important. The dotted line indicates that this group, which is the renewable energy equipment group, has been very strong throughout this period. And then if you can locate the leader of that group, which ENPH is, you've got a tremendous stock on your hand. And this is why we look to the weekly chart first. What do you see? 1 down week, 2 down weeks. This was actually an up week. It just closed below its open. But if you find groups or stocks like this which are in a nice tight chart pattern and are moving up, you look for places to get into these stocks. Now let me go back and let's see if I generated this list. I did not. Let's go into the designer again. And I'm going to let's see what my selected group is here. I want to clear that. I'm going to choose a group here. I'm just going to take the top raw combo stocks for this year. And these children should be, well, they're not checked, are they? I'll have to check them. Won't take me long. Well, actually, I'm going to change my mind here. I'm just going to take, let's just take this group right here, the stocks from January 2nd. Okay? And so I'm going to choose the opening price of January 3rd, and we're going to go through yesterday. So I am just taking the group from the 2nd and started on the 3rd. And out of that group, there were 55 gainers and 32 losers up through yesterday. And the group returned 22.65% if you would have bought every one of them and equal dollar weighted them. Now that outperformed the S&P 500. You know, that, what, 6-7 percentage points? None of us are going to go out and buy all those stocks. But what you want to do is you want to find the stocks with the best charts. And you want to look for entries. And look what's on top here. Since the first of the year, ENPH is up, let me get an arrow here, 533.44%. Followed by that little stock, apps, which is up 203%. And the third stock is eHealth. That was before today. I don't know what eHealth did today. I don't know if Pierce is on or not. I know he's in here's eHealth. And then here's Okta. These are all familiar names, aren't they? Or familiar symbols. Because they keep coming up. Now, this is why we control risk. Because here's a stock that lost 87.8%. Here's another one that lost 65.51, 64.13, and so on. These stocks more than likely appeared in that list a few days, and then they started breaking down. But you have to control risk. But even without any risk control, if you had enough cash with this group on that day and you wanted to equal dollar weight it, your returns would have been 22.65%. But we're not going to do that. It's obvious. So we need to look for setups along the way. And we need to control our risk with position sizing and allocating so much money for each one, knowing our maximum risk. And I have that spreadsheet. I think most of you have the spreadsheet. But another thing I've noticed from being on the Skype board, there's a lot of stocks that have made tremendous runs that people have gotten stopped out along the way, and this is where these fractal charts may help, because we can analyze the charts, not put hard stops in. I don't know. How do you feel about hard stops? Sometimes they're good. A lot of times they're very frustrating. So you need to get a feel for money flow, and that's where we can look at the three charts with the emphasis first upon the weekly chart, and then the daily chart, and then the smaller time frame chart where we can look for potential entry points. Now, I've only got 20 minutes left. What I want to do is talk about using this group, which is generated daily, and looking for potential candidates. Yeah, it's whatever works, Mike. I usually use hard stops too, but sometimes I don't. And if I don't, I certainly have an alert in there, and then at the end of the day, I say, I'm going to dump this thing in the morning, or going into the closing bell, I may dump it. But so many times intraday, especially if a stock's really been strong, you're going to get taken out, and then you know how that feels. It's not much fun. So it's just a matter of whatever you prefer. So let's go. What I want to do is I'm going to just go to the scorecard view right now, and I'm going to choose going to go into my smart groups. It's under Ian's and my name, and it's under leaders, raw, relative strength, raw combo. And you can see when you're in that group. Let's see how this group did today. Well, there are some winners, some losers. Precious metal and mining, this is a dominant group. Biotech, renewable energy equipment. You can see how it breaks out here. And then I like to look, this is the intraday price change up and down. And you can see that 76% of these stocks were up today, and only 23% were down. So this is a very strong day. Obviously, the NASDAQ closed up. What did it close up? 2.24%. So we should have a good day with this group. But what I think is a good thing to do if you want to just work with a single group is consider using this. Because why? I'll tell you why. It's if you look down this list over here, these two columns, relative strength rank and group rank. Relative strength ranks are all in the high 90s. The group ranks may not quite be that high. Forget about the EPS rank because let's look at Goldfields. Goldfields does not have a EPS rank, but it's got and I just grabbed this stock. It's got a really nice weekly chart moving up. And you can see that this stock follows the group, the dotted line. And what's my other line in here? That's the 18 EMA on this particular chart. But you're going to find more often than not that the groups are extremely powerful. And when you get in a market like this, which has been choppy to say the least, and we could see it reverse tomorrow as much as it went up today. It's always good to be in the strongest groups. Now let me bring this back up. Go into my industry, and you can see that the precious metals dominate this relative strength group as of yesterday, and I would say that it's going to be more of the same tomorrow. Precious metal and mining, I'm just sorting down here, and you can see from here down to where my mouse currently is. Look at the let's see if I can isolate these. Well, 28 out of the 43 were up today. This one got hit hard, down minus 14.18%. But this raw relative strength group, in conjunction with, or in addition to, the stocks and groups moving up, is going to get you into stocks that have a potential to go much higher. Now, the difference between the stocks and groups moving up, and you're going to see a lot of duplicate symbols in these. But this particular group, using the leader's raw relative strength, we know that these are all high relative strength stocks. Now, how do you find the ones that you may want to get into? Yeah, they've had big runs, a lot of them. Does that mean they're finished? Well, you can see by looking at E and PH that once they appear in the list, it does not necessarily mean that they're finished. So what I like to do is go into this group and start using some of the other tools that I've put together for you. Now, the impulse reaction, this is just a view of stocks that have pulled back from the prior day's high. And now I'm using my 1010, or the VPOC has to be positive, and it has to be in a fan uptrend. So what I'm going to do is I'm going to minimize these, and in this window over here, I'm going to do this. I have a tendency to go too fast, I think. If I do, just tell me to slow down. I'm going to go into this visual filter backtest charts, this folder, and use number 1. And then I'll zoom out. Let's see if I can make this larger. And this is a joint company. Let's zoom out some more. And what this does, if you're using this chart, it's 01 VFB chart view. It's down in the VFB folder. You double click on that, and every time there was a pullback here, an IR pullback, which means it's just a reaction pullback, it shows where this occurred and if it was successful or not. Like here, it pulled back for several days in a row and then it took off. There were several pullbacks here. It really didn't do much, but then it took off here. Didn't work out here, but if you waited to buy on this high here, you never would have taken the trade. On this one, this would have been a buy today on the joint company. Okay, so that's one screen. But there are multiple screens. I'm going to go into my volume point of control scans. Now I'm going to stick to the stocks where the fan is up, and by the fan being up, it means that the moving averages are stacked, and I'll show you here in a second. And these are stocks with a VPOC with a 3-day window. This is the days since the 1010 crossover. So this Adesto Tech crossed over yesterday, which would be right here. You can see it happened back here too, but there was a failure. This got caught in the market meltdown as the group came down. But look at this. Here's a VPA flag, a VPA flag. I'm going to do this. There's a crossover here. And the VPOC is down here in the bottom window, and it turned positive on that day. And there was a nice follow through today. Okay? Trying to get this window to go back. There it goes. So let's look at another one from yesterday. Well, there's the joint company. It passed over also after. This is a counter trend, and it passed over. These VPA flags come in very handy because they show you, based upon the criteria in the code, that there are some signals that are appearing. And in this instance, it was strength seen returning, and this is a 2-day window. Here's another one. Well, I'm going to go to number 3 here. This happened let's see. I don't know why the bar is showing up 3 of these. Am I on the oh, I see. I'm on the wrong column. My mistake. This is the days since the VPOC. This is the days since the VPA flag. So 3 days ago, this stock started appearing with a VPOC crossover, and there was a confirmation with the VPA flags also, and this stock has moved up nicely the past few days. It's just a little small stock. I just happened to be in it, and you know, I found it with this. It's inexpensive stock. It may not go anywhere, but I went ahead and got in. What did I like about it? I liked this, and then I looked over here and I liked this weekly chart. It was holding in this area. The group was going up, and this bar here represents the last week, which would include these bars right here. And if I, just out of curiosity, see if I can find that chart of mine. Where did it go? Did I close it? I must have closed it. No, I didn't. It's right here. I'm going to pin this so it doesn't go away. Okay, so I actually put these lines in here. This was an established low right here. It came up. It formed a lower high right here. And if it took out this area here, oh, this is the wrong chart. I'm sorry. I need to watch what I'm doing here, don't I? ATEC. If you like this concept of fractals, you know, going forward, and I think it's a very valid concept, we can spend quite a bit of time on this if you'd like to. Okay, I didn't draw anything on here, but let's see if, here's a low. It went up here. Here's a high. Then it came back down. This would be a lower high. I mean a higher low than this one. And then the breakout went past this one. This is where you want to consider getting in. Okay, here's a low. Went up here, touched this area, came down and formed a lower high when compared to this low right here. And then it broke past this high right here, and you can see the volumes coming into it. That's a potential place to get into it. And you know, it never did come down and take this area out. And then here is here's a new high. I would consider this area a higher low here. And then with the breakout past here, another place to get in or potentially add to the trade. Now remember, these are 78-minute bars. It's not like looking at a 5-minute chart, which can drive you crazy and make you, or make me anyway, nervous, plus being very indecisive. So this is why I think these fractals, you have your primary trend here, you know it's strong, you're getting a signal from the VPOC, and you're looking for entry points on the 78-minute chart. So that is another way to look at it. Maybe there's too much analysis here, I don't know, but I personally like the concept. Now getting back to this, what do we have here? Yesterday we had a VPOC crossover based upon this screen. It's this 0 right here. 0 was yesterday, And what else did we had? We had an effort to rise. Now I notice on the board there's been an awful lot of chatter about what the market's doing, what other people are saying, and so on. I don't care what they're saying, and you shouldn't either, because what that does is it freezes you. You decide you're not going to do anything, and there are always opportunities. I mean, that's what it does to me. I don't know what it does to you, but you start looking at Hindenburg's, which are fine because, you know, it can save you. You should know what's going on in the market. But when you start reading tweets and the commentary from everybody else, I just think it's really detrimental. At least it's detrimental to me. Now, you can agree with me or disagree with me on that. But what I'm pointing out here is there are always ways to get in, or stocks that are going up, and you don't just have to sit there. Now, let's do another thing here. I'm going to come up here. These are 3-day windows fan up. If you go down here, here's a VPOC crossover. These are today, which would have been yesterday. That, let's see, the fan up here had 39 securities. Yesterday, the VPOC crossover had 22. And the ones that are successful crossovers are going to be green, and they'll be coming to the top of the list. And you know these crossovers happen today. It's the same. It's many of the same stocks I already looked at. Let's look at, I haven't looked at NVCR yet. But notice, and I have not emphasized this enough, notice that when these things occurred in the past on a nice tight chart, on this weekly chart, yes, there were multiple weeks of a pullback here, but we're looking at a date here of about May, which would correspond with this right here. This is a VPOC crossover. How do I know? Because I am going from the warehouse view into this VFB charting view, and every time the conditions are met on this chart, a green line is generated. And had you just, or had I, or had anybody just followed these signals on this particular stock, you would have made a lot of money. This, let me get out of here. This signal was generated about, well, I can look down here, 44.60. Had a nice run up here, little pullback, but notice it didn't really dip down into the moving average as much. Let me make this full screen so we can read it better. In fact, the 3 stayed above the 6. Even on this one down here, it looks like it just got down to the 0 line on my histogram. So the write-up was good. Here's a pullback. Notice that it pulled back with the group. Group came down to here. This would have been a counter trend. What happened here? There's a VPA flag, 2 VPA flags. Yeah, you get some negative ones here, but it's above the moving average again. And the 3 and the 6 stayed positive the whole way. So here was another chance to get into this stock. Notice the histogram. These histograms stayed positive, the longer term. Well, this is I consider the short-term trend, a short-term trend, with the 6 above the 18, intermediates 18 above the 50. These didn't come down. Here's your short-term trend. Yeah, you want to save your profits here, but boy, here's an opportunity to get back in. So what are the components of this? The components are a strong weekly chart, a strong daily chart with signals based upon the VPOC, and I'm not going to go back in time on this one because it'd be too hard to sort out. Let's look at another stock here. Intelligent Systems. Now this was generated yesterday. On this one, You can see that there were multiple signals, didn't really do much, kind of got chopped around here. I would bet that corresponds to these bars over here. And that would be May. Yeah, this coming down here corresponds to these, and then we started holding up. It started holding its own through here, and that's where this chop comes in. The histogram was negative. You really need it to clear the 3 above the 6, and once that happened, this stock, well, to this point anyway, took off, and then it got caught the other day in the market sell-off. What do we have here, though? We have a VPA flag and a hammer on the same day. And where did we get the VPOC crossover? We didn't get it until yesterday because it got hammered down pretty good here. And you can see the magenta in here rather than the green. But had you taken this trade today at the open, you'd still be up a little bit. I haven't talked much in recent months about this VPOC entry, but it is really a good entry where the bulls are trying to take back control. It's not always guaranteed. And I don't know why there's my green bars. This is wheat and precious metal. Meritage. But every time the filter rings true or gives a signal, you can actually look at this chart, see where the prior signals are generated, and then you can make decisions based upon that. Now, I'm going to go a little bit further here. And these are things that we can really talk about in the future and tie the chart analysis into it because I think that is such an important part of it rather than just relying upon signals. Notice everything that I talk about, it's all based upon price and volume, support and resistance. I don't even look at the other indicators anymore. These histograms are based upon price. The VPA are based upon price and volume. The VPOC is based upon price and volume also. Now you can look at any of these. Let's do one more here, and then we'll continue this the next webinar if that sounds good to you. And we'll start looking for stocks. Now let's look at expansion 3 up through the 6 today, and I'm still using the same group. There's that Adestos Tech. Here's Diebold Nixdorf. And you can see that the 3 went up through the 6. We also had an effort to rise yesterday, and the it looks like the VPOC crossed over yesterday also. VPOC, no, this is 3 up through the 6 now. I got a little confused there. So every time a green bar is appearing here, it means the 3 went up through the 6. This is what's so nice about this visual filter backtest chart. It shows you where it happened previously. Let's look at Fair Isaac here. Look at this. That's a very expensive stock, but the 3 went up through the 6, and it gapped open today, and a nice move up if you have that kind of capital. Look at this weekly chart here. Where is the dominant force in this stock? It's over here. It's in the group. It's in the chart. And when these weekly charts really have that much momentum, especially along with the group, it's hard to turn them around. What you want to stay away from are sloppy looking weekly and daily charts because you'll get killed. Let's look at INS. Now this is kind of a sloppy chart here. This is the one I already looked at. I don't want to look at that again. Let's look at NVTA. Tight up through here, and then it got loose. But what happens when you start looking at this? When the candles really get small, it is finding support. Now, I don't have the VPA on here. Let's just turn it on quickly and see if any of these show up. Now, look at this here. Effort to rise on this weekly chart. And this is back on June 7th. This is a weekly chart. It would have been right in here, and we were getting multiple VPA charts or VPA signals on the daily charts. And, you know, it's a little bit loose, but not too bad. Look at the histogram here, this short term. That kind of gives you a quick visual of how loose a chart is. And obviously you like to see this staying above the zero line. But when there are counter trends, that's an opportunity to get in. My definition of a counter trend is when the 3 goes down through the 6. And then we're looking for the crossover to the upside. So let's... Okay, every time there was a green bar here, notice I went back to the warehouse view, the 3 up through the 6, and this transfers the filter to this chart, and where these occurred, where the 3 went up through the 6, a green bar is generated. Every one of these signals, not over here, they were good at the time, but then this must have been earnings, but every one of these were excellent signals. And this is just a visual confirmation, the green bars. Okay, I'm running a little long here. I'm going to have to stop. You know, I only coughed once, I think. That was pretty good. Any questions before we go? In a summary, what I'm saying is, if you don't want to look for a whole bunch of stocks, just look at the leaders' raw relative strength. And if I didn't do this, I should have pointed this out more. What you're going to find is these are high relative strength stocks with a high group rank. And what you're looking for, you want strength. If you're on the bull side, you want weakness, of course, if you're on the bear side. But you have a predefined list here every day. And there are many opportunities just in these 100 stocks to find great candidates. So nobody has any questions? Do you like this approach? Yes or no? Or yeah, I am going to. I'm really going to get into the fractals more and more. Now, I learned about fractals I took an options course probably 5 years ago. I'm always taking courses, most of you, because there are always people that know a lot more than I do. And anyway, Doc is, he's a well-known options trader, and he came out with this, well, I don't know if he came out with it, but that's where I learned it, this fractal theory. And let me show you one more thing before we go. This is his layout in Thinkorswim, okay? And after we get into the fractals, I'll give you this layout. I want to do the NQ if I can get it to come up. So what it does is you're looking here at monthly, you're looking at weekly, you're looking at daily, and you're looking at the 78-minute chart here. And you can see, I'm just going to leave it this size. You can see where I've been drawing some lines here. I moved them up. Here's a higher low from this low right here, and then a breakout here, an opportunity to get in. This would have been another opportunity right here. I'm not a futures trader. I can't live in the fast lane like that. But what it does is it gives me a visual of what's happening in the market. So we come back here on this daily chart, and these lines are, of course, transferred to all the charts. And look how much ground this has regained in, what, 3 sessions here. And, you know, everybody's saying, or a lot of people are saying, stay away. Yes, it's volatile. It's dangerous. But all of those stock charts I showed you, or most of them, you didn't see a lot of volatility in there, did you? So you really just need to make your own decisions. But what I'm pointing out here, these fractals, when I look at the weekly chart here, look, this has regained most of this, or all of it. And then when we put it in perspective with the long-term monthly chart, this is just another blip on the radar so far. Okay? Thanks, Bruce. Thanks, everybody who said it was a good webinar. By the way, I may put this up just for general consumption. They don't have my files anyway, so I think it's an interesting concept. Now, this is something that Doc uses, a choppiness index. I think it's pretty irrelevant, but we have the great advantage of using VPA flags in place of stuff like this. Essentially, what these are showing, and I've never found much validity to it, is when these lines get up to the top, you are, well, I shouldn't even talk about this because I can't remember, so I'm not going to. So let's just forget it. But we have VPA flags, and the VPA in TOS is different than what we have in HGSI, but not very different. Paul, you would attest to that, wouldn't you? That, you know, the signals are pretty decent in Thinkorswim also. So thank you. But we're going to do more of this, and I think it's a way to stay in trades that you would have dumped out of or so on. You just see how it's building in the short term. You put your lines in. If it hits there, you're out. You can still do your position sizing and maximum loss and so on in the spreadsheet, but this way you'll kind of have a double filter, if that makes any sense, to make your decisions going forward. But when I figure out what this choppiness index is, I'll give you a better explanation. I just forgot because it's been several years, but that could even be taken out of there and just, and I'll probably do that. We'll just use VPA flags because I think they're much more effective. Okay, I'm going to shut it down here. I've gone 1 hour and 13, but you can review this on this PDF file. And yeah, thanks, Dennis. I hope I can get rid of it too. I'll send this. I didn't want that up there. I'll send the PDF out. It's not going to do you much good, and I didn't even go through all those steps because it wasn't necessary. The point is, I'm going to summarize one more time. There are really good stocks that come up in that list all the time, and you just want to, no question, Tom, you have to have your buy-sell plan. But I think this doing it with the fractals gives us a totally different perspective, because, well, not totally different, because we're looking at the long-term charts first, and I'm not going to be using monthly charts with stocks, but we're going to look at weekly, daily, and then the short term. It just gives us a different look when we can see it building from the inside out, short term to daily to weekly. Okay? It'll make more sense as we go along. I'll go back and really try to put some emphasis on the fractals, getting a little better versed in it than I am. I've got a pretty good feel for it, but I'm going to really start incorporating that into the process as we go forward. Because with VPA and Fractals, I think it's a great combination. Okay, I better shut this down. I'll get this out to you yet this evening, probably even late this afternoon. Anything else, or is that it? Okay, well, thanks for attending. Only about half the people showed up, and hopefully they'll watch the video. Thanks a lot.